Well, there are big trends that we talk about in the markets every day, sometimes trade, sometimes technology. But where investment flows are increasing is another trend to watch. The continuing rise of the ETF market, particularly in Canada, is hard to ignore. Carlos Cardone is Managing Director of ISS Market Intelligence Canada and joins us here in studio. It's great to have you with us. And, you know, in a world where people are thinking about how they want to invest, the vehicles they use for investment is hard to ignore, the rise of the ETF market. How do you approach where you want to do the research, and what is the research telling you?
So we are seeing a growth of ETFs certainly across the entire market. Canadian retail investors hold ETFs primarily in full-service brokerages with advisors and in online discount brokerages, self-directed. There's approximately $190 billion in ETFs in both channels, a little bit more on the self-directed side. And ETFs in both channels have been growing tremendously over the last several years. And this is connected, of course, to more products becoming available. ETFs are not only replacing mutual funds in some cases, as is usually said, but also direct securities. We see ETFs gaining ground to pretty much everything that is in these channels, direct securities, direct bonds, and so in many cases our assets are increasingly going towards ETFs in both channels. Just to give you an example, full-service brokerages hold today $2.2 trillion in total assets. Within that, $190 billion is in ETFs. ETFs have been growing at about 30% over the last year in full-service brokerages, more than 50% growth in self-directed brokerages.
Those are helpful stats, and at the end of the day, there's still a large amount of capital in mutual funds, but the growth in ETFs is surpassing those traditional products. And you talked about the variety of ETFs. Do you think, is that the single biggest reason that the industry is putting more products on the table for people to look at, something else?
Definitely. Asset managers from pretty much every corner are trying to cover all the bases in terms of options for ETFs. This is not a newer phenomenon. It's something that has been developing over the last several years. Mm-hmm. It's very global. We have seen the emergence of active strategies in ETFs several years ago, something that started actually in Canada for the most part, and then became more of a global trend. And in terms, of course, of activation of strategies in ETFs, we've seen an increasing variety of options. When we think about active in mutual funds, we usually think about a fully active, unconstrained type of strategy within bounds, within an investment objective. But in the case of ETFs, we have seen different styles of activation, different types of activation becoming available in those products. Enhanced indices, products that are active to some extent, for example, an active asset allocator with passive components and such. And in good part, the activation strategy and the type of activation is also reflected on the pricing of these products, that in many cases tends to be lower than other options available in the marketplace, but not necessarily. There are products, of course, in the ETF shelf that are fully active, just as it is the case with mutual funds, and in many cases also the pricing of those products is equivalent to other mutual fund options.
But there's variety, which means that if fees matter to you, that there are those lower fee ETF products. What about investors themselves? Like, increasingly, the investing world is accessible by a lot of different people on their phones, etc. So if investors are doing more of it on their own, maybe they're watching BNN Bloomberg and also managing their portfolio, has that, in your opinion, played a role in the rise of ETFs as well?
Most definitely. That's actually the fastest growing spot for ETFs right now in Canada.
The do-it-yourself
channels.
Okay.
Everything self-directed in Canada has been growing very, very fast. To put that in numbers, in online discount brokerage channels, there's right now $1 trillion. And that channel has been growing at about 25% over the last year. Now, within that, ETFs grew by more than 50% in the channel. Again, also taking away not only from mutual funds, but also from other investment options, including stocks and bonds and so on. We're seeing more money going towards these products than to direct securities. And self-directed in general, not only, of course, online brokerages, which is large, $1 trillion, as I mentioned, but also robo-advisors. In Canada, robo-advisors invest almost exclusively in ETFs. There's about $36 billion in robo right now, but also growing tremendously fast.
We're almost out of time, but if people want to explore how many options are out there, because there are a lot, what's a simple thing for people to do if they just want to learn about all these different ETFs that are out
So
there?
if you are operating with a self-directed platform in an online discount brokerage, it's very likely that there's an equity center or an ETF center
You can just search
option.
around
You
there.
can search, you can filter, and of course there are many providers, data providers out there with very easy to use filters to look into different products.
Carlos, thanks a lot. Really interesting.